to Retire Abundantly with Hill Wealth Strategies. My name is Cynthia DeFazio, joined today by Dan Hill and Daniel Rodriguez of Hill Wealth Strategies. To our viewers at home, we know that you're in the viewing audience today and you're asking yourself, wow, do I have a plan for taxes in my retirement? That seems to be something that's keeping people awake at night. Right now, the unknown, what's on the horizon, what's coming, and how do you plan for it? Do taxes change in your retirement? Today's show is all about taxation in retirement. Dan, how are you today?
I am fantastic. I'm glad to be back with you. I want to welcome the viewers in this week. We're happy for you guys to be here helping us. And how have you been?
I've been great. Thank you so much for asking. Again, I always look forward to our time together in the studio. It's always so informative, and we have fun.
Yes.
Most definitely. Daniel, how are you?
I'm doing great, and thank you for having us. It is so much fun always being back here and getting to talk to all the folks out there that maybe have questions or anxiety or anxiousness about retirement. So it's always good to be back here, and thank you for having us.
Of course. Thank you for being here. And I know a lot of people are in the viewing audience today, and they're asking themselves, wow, do I have a plan for my retirement? Not only a plan or income plan, but a tax plan, because it's so incredibly important. So Dan, talk to us a little bit about the viewers that may be thinking, well, this show's not for me, because obviously when I hit retirement, I don't have my paycheck anymore, so my taxes are going to go down. I can get by. I can live simply. Talk about why that's not a strategy.
Yeah, it's not. I mean, we have a whole workshop called Taxes in Retirement that we usually do at the end of the year and during the tax season, which just ended in April. So then we shift back to doing other workshops. But yeah, so a lot of people, like they have a tax preparer. So somebody that does their taxes and they think everything's controlled. And we always say, taxes in retirement are different, okay? You're cutting the cord to the cash cow. So now we're responsible for your paycheck. Usually Social Security is not enough. Usually you don't have a pension. So whatever you've accumulated in your qualified plans, we got to make sure that lasts, and we got to make sure we do it tax efficiently.
Okay. And again, I know that we've talked about this, but it's super important. So Daniel, I'm going to put you in the hot seat for just a moment.
Okay.
The difference between strategic tax planning versus seeing an accountant. Why is that super important, especially in the retirement years, most of all?
Yeah, so kind of like Dan touched on, when you bring everything to your tax guy, we'll say you usually bring all your statements for the end of the year, and for lack of better words, they're just kind of like filling in the blanks. They're taking all your forms and they're putting it where it's supposed to be, and they say, all right, at the end of the year, this is what you owe, this is what you're going to get back. That's it. Thank you. See you next year.
See you next year.
See you next year. Where we come in as really tax strategists is we're proactive. We're looking down the road for retirement next year, 3 years from now, 5 years from, 10 years from now. So we really want to set you up for life as opposed to kind of just filling in the blanks. And no offense to any of the tax preparers out there,
exactly.
But it's a completely different beast when you're planning for taxes and somebody's future and the rest of their life.
Absolutely, Daniel. Thank you. Dan, how can this type of strategic tax planning actually reduce someone's tax bill in retirement?
Yeah, so one of the things, either tax preparers, which I love them, don't get me wrong. I tell everybody I love them because I don't want to do them. Okay, for whatever reason, my dad wanted me to be a CPA and my mom wanted me to be a lawyer. But so my brother's 2 years older than me. He is a CPA.
Okay.
And he went to William & Mary a couple years ahead of me and went to CPA track. My dad said, I want you to go to CPA. I said, no, I took introduction to accounting, and that's enough for me. I don't want to go be a CPA. But I do love practicing tax avoidance. So I know enough to be dangerous. And then I tell him I have my brother on speed dial. So if it gets too complicated, which he does help Daniel and I with some complicated tax analysis. But I can do enough when I look at your tax returns to do forensic analysis on it to go see there's opportunities there to save you some money, okay? So that's what we practice. We practice tax minimization. We can look at it and go, hey, there's opportunity here for this, that, or the other. Just depends on what I'm looking at on that piece of paper.
Okay.
So, I mean, I don't know who doesn't want to save $1,
That is true. Very, very true. And Daniel, what we have found overall that obviously people have 3 different types of accounts, if you will. Talk a little bit about those different types of accounts. I know that one would be tax deferred.
Yeah, so you have your tax deferred accounts, which typically are like your qualified plans, which most people think about, like your 401ks, it's all pre-tax dollars. You're putting it in there, it's growing tax deferred. IRAs, things like that. And then even annuities will also be like a tax-deferred account where you can put your money in. It's going to grow tax-deferred. When you pull it out, depending on what type of money was put in there before or after tax dollars, then all of it might be taxable, or maybe just the gains are taxable. So you look at those different buckets and see how that could help your strategy for retirement planning. Should I put it in a tax-deferred bucket like that, or should I put it in a taxable bucket, which is almost kind of like a pay-as-you-go type thing, where you think of maybe like a money market account, maybe a CD account, after-tax dollars like an individual TOD account, or a joint account from like a brokerage. So you put that money in there, and you're going to get taxed at the end of the year. You're going to get a 1099 DIV or INT, depending on like the dividends or interest that you got. And then you, like we talked about, you kind of plug that in and figure out the gains and the tax implications. So you have those different buckets of money, and it all comes together. They're all pieces of the puzzle for your retirement plan.
Okay. And then also the taxable bucket, I want to spend a little bit more time on that, Dan. That would be like your checking savings accounts. Obviously, Daniel mentioned that your bank CDs, your stock bonds, your money market funds. Why is it important to look at those overall when you're having a tax strategy in place for a client?
So what we find, most people nowadays do take advantage of the 401k and the qualified plans. And a lot of people don't have a lot of taxable account.
Okay.
I mean, it's just, and these are just average middle class Americans that are both working, raising families, paying their bills, and they contribute to their 401k. So there's just not a lot of money left over, okay? But it is important to those people who do have some, what we call after-tax or taxable accounts. So you paid the tax on the money, you got a little money left over your paycheck, you put it in one of those instruments like Daniel was talking about, or in a brokerage account or in a portfolio, and you pay as you go, because you're going to get dividends, you're going to get interest, potentially capital gains. Even though you didn't sell anything, there's some turnover going on inside your portfolio where capital gains are generated. So we have to manage those things too.
Okay.
And the other part of it is, like I said, we had a client come in who just hit the tipping point, as I like to say. It was kind of, I kid about it was 2 men in a truck, but it was actually 2 men in a bulldozer.
Okay.
Okay, that now is 30 men and many bulldozers.
Okay.
He just hit, he just boom, all of a sudden just work, and all of a sudden he's making some really good money. So he has a lot of disposable income. So, once you max out those tax deferreds to the intelligent piece of it, like we said, and he's making too much money to do a Roth, what's the solution? For him, he's at 45 years of age, it's a perfect solution for him to do life insurance, because there's no contribution limits on life insurance. There's no income limits on life insurance. So he can contribute to life insurance. He's 45. We put a plan together with him where he can contribute to life insurance, pay the tax on those dollars today, okay, when we have really nice tax brackets. And then when he's 65, 20 years from now, he can take it back out again tax-free.
Wow.
Daniel had mentioned before, when you bring all your stuff in, a couple of our clients that we've been successful in looking at them go like, hey, they did have a lot of after-tax dollars from life insurance proceeds or whatever. And we said, okay, we know the tax brackets are pretty favorable today. We put all their taxable money up front, and we're pulling it all out. And Daniel mentioned, once they pay taxes over the first 5 years of this income plan, they will not have any more taxes or very minimal taxes for the rest of their life, because now we're going to use all the after-tax dollars to distribute and replace, supplement the pensions and the Social Securities.
Okay.
So those are the fun part of our jobs, is coming up with those strategies that minimize taxes and just do it as efficiently as possible.
Well, everyone loves tax-free.
Yes.
That's like the best.
Right.
Well, Dan, you and Daniel have a very special offer to present our viewers at home today. Would you like to take a few moments explaining what that is?
Yes. So for the viewers, for your friends and neighbors, whoever, as you've heard me say, love to save everybody $1 or $2, go to hilltaxbill.com. You got to put in a little bit of information, and then it'll come to us, and we'll take a look at it, and then we'll follow up with you. It's kind of the Reader's Digest version, but go to hilltaxbill.com. and put in your information, and then we'll follow up with you and get you to come in the office, and we'll help you minimize your taxes.
Dan, thank you so much. Daniel, thank you so much. Viewers at home, who doesn't want to minimize their taxes? Everyone does. Take advantage of this today. Click on that QR code, or better still, visit hilltaxbill.com. hilltaxbill.com, or yes, you can click on the QR code. That'll take you to a landing page for Hill Wealth Strategies. You can also schedule one-on-one time with Daniel and Dan. We realize that the tax talk can sometimes be a little sensitive. You may want to meet in person. If that sounds like you, go ahead, call in today. There's no obligation. 844-437-4724. Well, we've talked a lot about taxation and retirement in this first segment. We're going to come back. We're going to talk about some solutions to help you stay sane during tax season. Stay tuned.
I worked for Anheuser-Busch as a brewer. I made beer for a living. A friend of mine that I coached baseball with, he goes, "Yeah, I want you to come work for me." "What do you do?" "I'll tell you about it later." Turns out he worked for John Hancock, and the rest is history. Here we are 26 years later. That experience at first was very good. I'm really excited about the just total opposite of working in a factory making beer to having to shave and get a haircut and wear a suit. Kind of grown up blue collar working my way through college, but yeah, it was different, but it was very rewarding, you know, helping people with their finances. And after a while, I always tell people, when you work for a company, you work for a company. So fast forward now where I'm founded Hill Wealth Strategies, and I work for my clients. I can truly act as a fiduciary, which means I will only act in the best interest of my clients. We have the world at our disposal, so we're not tied to whatever is in the box that they say we can sell, because we can make alliances with anybody out there, make sure that our clients are getting the best solutions for their strategies.
Welcome back to Retire Abundantly with Hill Wealth Strategies. My name is Cynthia DeFazio, joined today by Dan Hill and Daniel Rodriguez of Hill Wealth Strategies. And we're talking all about taxes and retirement. We know it makes a lot of people uncomfortable. Well, obviously, Dan, we talked a little bit about the three types of buckets. We've got taxable, tax deferred, and tax free. And it's so important to be allocating your assets accordingly, depending on how those will be taxed. But we have some tools in the toolbox. Let's talk about some tax tools that can be implemented to help with all of this that's going on surrounding taxes in retirement. What are some tools?
Well, first of all, we got to come in there and see what tools we can, you know, might be appropriate for you.
Okay.
Because everybody's situation is a little bit different, unique. So, you know, the different tools are Roths is a tool that might be a proper strategy for you.
Okay.
Life insurance, as I mentioned earlier in this segment, might be a proper strategy for you. So it just depends on the individual, their income, you know, and their marital status, their deduction status. There's a lot of variables that go into it for us to determine what in our toolbox we can bring out and implement for you and your family.
It's customized. So it's not
very
cookie
customized.
cutter. Everyone's situation
Correct.
is different. Thank you
Yes.
for putting light on that. That's so
Yes.
true. Daniel, overall, explain to the viewers, where are we exactly in tax history right now? People say taxes are on sale. Would you agree with that statement?
Yeah, so historically, taxes right now are at an all-time low. The Tax Cut and Jobs Act of 2017 reduced the tax brackets, helped raise the standard deduction, so everybody's kind of seeing a little bit more money in their paycheck. It might not feel that way after they spend it all because of inflation and the cost of living and everything like that, but statistically, historically, taxes are at an all-time low right now. Those laws are supposed to expire and sunset at the end of this year, 2025. So Congress hopefully has you know, that on their docket to go ahead and renew that, because if they don't, then we're going to be back to those higher tax brackets that we were before 2017. So taxes are always changing; they're always going up and down with different administrations. Deficits, the needs, whatever it may be. So nothing is forever. So yeah, I would completely agree that taxes are on sale right now, and we have to do everything we can to take advantage of it.
And it makes perfect sense when you explain it like that, because obviously, why wouldn't you want to pay taxes on the seed versus the harvest down the road?
Perfect.
Makes perfect sense.
Excellent.
Well, Dan, I'm also thinking about all of the folks that are in the viewing audience today that have been working, and putting money into their tax-deferred accounts, the 401ks and what have you. Talk a little bit about, we talked about the traditional IRAs and sometimes even using Roth conversions. Talk about how those two can marry one another to remove someone's tax burden, or at least to reduce someone's tax burden. What I'm trying to say, their burden,
Right.
their tax burden.
I know what you're trying to say. So I wanted to go back and mention, like when Dan was saying, when a tax preparer does your taxes, or a lot of people, you talk about do-it-yourselfers,
Yes.
use TurboTax. TurboTax is not going to ask you the questions that we're going to ask you. You know, it's going to say, put in your income, put this in. It's not going to go ding, 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 Roth conversion possibility for you.
Yep.
So again, it's kind of unique, okay? So we like to look at the person's situation and see what solution is going to be the best for them. That's what the whole thing about wealth strategies. The name of our firm, we kind of kept it simple. So, you know, we want to try to balance those buckets out. Like I said, we've changed our philosophy over the years where we don't want to just max out our 401k. We want to see if we can't, especially as we said earlier, if there's a Roth 401k version available to you, then we definitely want to take advantage of that to try to even out those buckets between what's tax deferred, what's tax-free, and then what's taxable if there's anything left over.
Okay. So if you don't make any changes, Daniel, and you start pulling money from your 401ks, your IRAs, is that taxed as normal income?
Yeah, so it's just going to be taxed at ordinary income. So your 401ks, your IRA, they all go in pre-tax dollars. You never paid taxes on them. So when you pull it out, it's going to be taxed at ordinary income, whatever your tax bracket would be. Then obviously, like you said, you have your Roth accounts that are going to be tax-free, and that's what everybody loves and wants to enjoy. Some of your Social Security may be taxable, and if it is taxable, it'll be taxed at ordinary income. You have long-term and short-term capital gains. So you have the short-term is going to be taxed at ordinary income, and then long-term is a little bit advantageous to you, where it's anywhere from 0 to 20%. So I know I may be speaking Greek to some of the viewers at home, but it's what we do every day, and to us, it's easy. That's why it's important to come on in so we can take a look at everything and get you on the right path and make sure you're not paying $1 extra that you don't need to.
Daniel, thank you. Dan, we've seen a lot in the news lately about people that are pulling money from their 401ks or their IRAs just to pay bills. Talk about why that's not a good strategy and why.
Well, in general, short answer is it's probably not a good strategy, but we always do arbitrage, like I mentioned earlier. We were talking to a guy who wanted to pay off some bills and was looking for advice from us, one of our clients, saying, well, if I want to take this money, and Daniel ran the analysis for him, I want to take this money out of here. And the tax burdens, I think, was 34%.
Wow.
It was going to, because that income, taking that money out of his IRA, which is taxable, and putting it on top of already on top of his and his wife's income, it's going to jump him up into a really high bracket.
Yes.
Okay. So again, I said, okay, we want to pay off let's just say it's a 20% interest rate on the credit card. I don't want to do that if it costs me 30% in taxes. I'm losing. So we looked at the options this morning, and one of the options he has is he can actually take a loan from his 401k. Okay, that won't be taxable.
Okay.
So it's kind of a win-win. We always look for win-wins. Take a loan from your 401k, use that to pay off the boat loan. One of his is a boat loan and these credit cards. Okay, there won't be any tax, and we'll get rid of those high interest rate loans. Win-win, okay?
That is
now,
a
he may
win-win.
not be able to contribute to his 401k while the loan's outstanding, but he's in such great shape, that's not a problem for him. He doesn't really need to contribute to the IRA. And it's like, I always say left pocket, right pocket. If you take it out of this pocket, there's no taxes. You take it out of that pocket, it's going to be taxes. Yeah, I can contribute to my 401k, but I've just paid taxes on $70,000 of tax-deferred money. So it's,
wow.
One of my buddies taught me this. So I have a car for sale, and it's $50,000, and you just come up and you say, here, I'm going to give you 70.
Okay.
Who would do that?
Right.
Nobody would. But if that's what you're going to do, if you take that money out of the wrong bucket, you're going to end up paying the tax burden to pay for whatever.
Okay.
Okay. So my brother was one of them. I want to pay off my house. I said, no, you don't want to pay off your house.
Yeah.
Because all your money's tax deferred, so it's going to pay, you have a $200,000 loan. It's going to cost you $250 to pay it off. You just wouldn't.
No, it doesn't make any
shouldn't
sense.
do that. Some people might do that, but they shouldn't.
Well, see, this is why people need to come in and meet with the two of you, because a lot of these strategies that are being put into place that we're talking about right now, they're not going to know unless they pick up the phone and call in. Dan, what's your special message again?
Again, Call 844-437-4724 or go to hilltaxbill.com, or you can use the QR code. I'm finally learning how to do that in my middle ages. I'm still stuck in the middle ages, But yeah, call the number on your screen there, 844-437-4724. Go to hilltaxbill.com or go to hillwellstrategies.com and get on the calendar. We love to practice tax avoidance and save people some money. So please take advantage of the opportunity.
Dan, thank you so much. Daniel, thank you so much. To the viewers at home, the number to call, 844-437-4724. Or as Dan mentioned, you can grab your smartphone, click on that QR code at the bottom corner of your screen. That'll take you right to the landing page of Hill Wealth Strategies, and you can book your complimentary consultation today. Once again, that website, if you're curious, is hilltaxbill.com. You put in a little information about yourself, and it'll actually tell you what your tax burden currently is today. We're going to take a very short commercial break. I mentioned the tax toolbox. We're going to talk about some of those tools when we come back. Stay tuned.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Retire Abundantly with Hill Wealth Strategies. My name is Cynthia DeFazio, joined today by Dan Hill and Daniel Rodriguez of Hill Wealth Strategies. And we're talking all about taxation in retirement. It's obviously a misconception a lot of people have that just because you stop working and your income is not coming in from a paycheck, that your taxes are going to go down. But that's not the case. And what you need to have are tools in the toolbox and also a strategy that Hill Wealth Strategies can put together for you. So Daniel, I know that we talked a little bit in the commercial break about the tools in the toolkit, if you will. Talk a little bit about someone who's coming in that's saying, Daniel, I couldn't wait to come in and meet with you. I want to show you what statements I have. My tax burden is here. What can you do to help me?
Yeah, so we look at their current tax situation, like we mentioned before, and find out if there's any immediate opportunities to save some money and kind of put in place a solid future. And then we look at the retirement date. When do we plan on retiring? All right, how do we prepare for that? What buckets of money do we have? We have some tax-free money here. We have some taxable money here. We have some tax-deferred money here. And just find out the most tax advantageous way to get the dollars out efficiently. And maybe we want to put those tax-deferred dollars up front, so then we just have a retirement that's full of tax-free dollars, which is also going to affect your Social Security and help reduce the taxes on that. And then everybody's just winning, everybody's paying as little taxes as possible and having an abundant retirement.
Yes, and that's really what it comes down to. You could not have said that any better. Thank you.
So I want to add to that, Cynthia. I think one of the tools we have one of the best tools we have in our toolbox is experience.
Yes.
Okay, and in this field, like you talked about, specialists or do-it-yourself. So, like I said, I'm not a CPA, I'm not an enrolled agent, I don't play one, but we have those people on speed dial. But we have so much experience doing planning and doing tax planning, and can see things that you just can't see to put together some of these success stories that we're sharing with the audience. So, again, just encourage people to come in and take advantage of our experience.
Yes, most definitely. And obviously you've mentioned workshops. Where can people find you for workshops, not only like right now, but in the future? Where do you typically go?
Yeah, so if you go to our website, hillwellstrategies.com, we have them listed there. We usually plan 3 months at a time. So Dan and I actually just planned before we came out here to meet with you and put a couple more on the calendar for June. And then we'll send out, as they approach those dates, we'll send out a little bit more information to people via email and Facebook campaigns on when they can get to those workshops.
All right.
And please come. We love to educate.
You most definitely do, because knowledge is power. So Daniel, I want to ask you, is it a very difficult process to take a traditional IRA and convert it to a Roth IRA? Because I know people are wondering, like, wow, is this really involved? What does that process even look like?
Yeah, so the process is very easy. The process is, just moving the amount of money you want to convert. That's easy. There's no real skill in that. The skill comes in how to do it the tax efficient way and planning for the future. Okay, what do our taxes potentially look like in the future? What are our sources of income now and in the future? How much is this conversion going to cost me today compared to how much these dollars might be worth in the future? So the actual process is very easy, but the skill comes from all the implications and being proactive in the future.
Most definitely. And Dan, what advice do you have for people that are thinking about converting a large lump sum right away? Just one transaction turning it into a Roth conversion, can that trigger a negative effect?
Well, it can, just based on everything Dan just said. It could jump you up to a higher tax bracket.
Yeah.
And those things, depending on where you're at in your phase of life. So if you're on Social Security, Dan mentioned this earlier, if you're on Social Security, there's a thing called IRMA. Income relative monthly, say it, what is it?
Income related monthly adjustment.
Income related monthly, yeah. So where if your income jumps up into kind of like the tax brackets, the Social Security has these brackets also that if you jump into another bracket, you have to pay a premium on your Medicare Part B premium and your Part D premium.
Wow.
So those are other things that we have to manage when we're doing these strategies, is making sure not so much that you don't go into IRMA, but taking that into account that, hey, this is going to make your Medicare go up X amount of dollars a month. But is the tax savings worth that? So all those types of things we have to take into consideration to make sure that we're doing it the right way.
Absolutely. And Daniel, if someone's on the fence today and they're wondering if they should call in and book that complimentary consultation, once again, talk about the importance of tax planning for the retirement years, please.
Yeah, so the sooner the better that you can come in. It's never too soon to start your retirement planning, your tax preparation, being proactive, whatever the case may be. So call the number, come see us. We're gonna take all of your statements, all your information. We're gonna figure out what your hopes and dreams are. We're gonna figure out what your destination goal is, and then we're gonna put you on the right path to get there.
Daniel, thank you so much. Dan, thank you so much. Most specifically to our viewers at home, we want to thank you for spending time with us on Retire Abundantly with Hill Wealth Strategies. As you can see, navigating taxes in retirement truly needs to have a professional by your side. The opportunity is in front of you today, 844-437-4724, or you can click the QR code at the bottom corner of your screen. Be safe, be happy, and be blessed. We'll see you back 1 week from today on Retire Abundantly with Hill Wealth Strategies. Take care.